What's up, everyone? Excited to use a video today about Bed Bath & Beyond, which is currently trading in the OTC market. So first off, there's a ton of news about potentially Ryan Cohen kind of stepping in and saving the company. And there was a pretty good breakdown of this story on CNBC. So I'll play that clip. It's a little choppy, but the audio picks up a bit towards the end.
Bedtime stories, a bankrupt company, and memes all have in common. Fellow Montrealer, chairman of GameStop, Ryan Cohen, or that's at least the speculation on Reddit right now. Bed Bath & Beyond filed for bankruptcy in April, was delisted in May, and now trades on the U.S.'s main over-the-counter exchange. The shares tend to float around until the entire bankruptcy process is over, and its bonds right now are practically free, highlighting the lack of value in Bed Bath & Beyond, especially after Overstock paid about $21.5 million for all of its IP. So that means that they don't even own BedBathAndBeyond.com is not part of Bed Bath & Beyond. It's Overstock now. And yet, Bed Bath & Beyond shares have soared, over 300% since its delisting, which is pretty uncommon for a bankrupt business. And more uncommon, you have retailer investors getting in, and even though they know they would be the last to be paid in any sale. So enter the bedtime stories and meme angle. The Reddit crowd has a theory involving Teddy Holdings, which filed trademark applications to be an online marketplace for everything from towels, picture frames, to children's bedtime stories. It's also registered as a bank in Delaware. The Reddit crowd noted that the address for Teddy Holdings is the same address for Teddy Publishing, which is the publisher of a series of children's books written by Ryan Cohen. There's that Cohen connection. He's a prominent figure in the meme stock world, although he did cash out of Bed Bath & Beyond just last year, making, over $50 million. Investors now, though, the retail crowd, are hoping Teddy may step in to somehow find value in the bankrupt retailer. I called and tried to reach out to Teddy's patent lawyer, but didn't hear back in time for this hit. And so what is this telling us? Rumors, we know, can move names, no doubt. Meme traders are hoping to connect the dots that may or may not be there, suggesting that Teddy Holdings and in turn Ryan Cohen can help find value in a bankrupt company that is no longer really Bed Bath & Beyond.
And obviously Bed Bath & Beyond saw these huge moves because of the meme crowd. They haven't given up on this name, even after it's filed for bankruptcy, even after Ryan Cohen cashed out, huh?
Precisely, and the corporate bonds are really not worth anything. So, and the value, so what's the value, right? Because the IP was pretty important, hence the reason why Overstock bought it. But they believe that this company, this shell, whatever's left of it, that hasn't been given to Overstock, could be renamed and taken under Teddy's wing. That's it.
I mean,
you're shaking your head no.
Well, it just shows you the lengths of wishful thinking that people are willing to go to delude themselves that anybody who wanted to get into this business needs the husk of Bed Bath & Beyond to do it. I can go back 30 years. There was a bankrupt steelmaker called LTV, and the stock traded around for years and years and years, and people shorted it naked. It was crazy. And it happens every cycle. But the fact that we have the encouragement here of somebody who at one point saw value in a doomed retailer is, I think we should just be clear that, these are people telling stories to themselves.
Or this is a really confident market right now, right? You have these investors seeking out any type of profit. We're reinvigorating the meme trade again. So what does that say when people are trying to find value in names that are pretty much dead?
Or we're trying to find alternatives to what historically has been private equity coming to the rescue, right?
Exactly, which has not always turned out very well for a lot of these retail names, of course, with all of the debt that they leverage, and then when other crises happen, big problems sort of resurface later on.
Fascinating.
It is fascinating.
You guys are all smiling.
Isn't it itself is a bedtime story, right?
Yeah, let me get my glass of milk.
Once upon a time.
But, yeah, Ryan Cohen came to the rescue, cape and all.
He's going to save this damsel in distress. Huh?
Some very interesting developments for sure for the company. It is pretty interesting to see that Ryan Cohen is starting a new company, and we know that because the company is based at the same address that his other companies are, and it basically does the same thing that Bed Bath & Beyond had done when the company was operating. So it's not a crazy leap to say that, he could be potentially getting involved and, buying out the company here. So I don't think it's that big of a leap. And I also want to make the point of that Ryan Cohen, he made a lot of money on Bed Bath & Beyond, right? And now a lot of retail traders got caught holding the bag, and some of them may be very upset at him. So I think more than a move to help, or more of a move to make money, instead of looking to make money, I think he's looking to make amends with retail traders and kind of help his reputation, right? Because his reputation is still very important to his fiscal life as well. Because when you consider his involvement in GameStop, well, you know, it would help his credibility. Well, it would be to help out all these retail traders, which, you know, got caught holding the bag. So I think when you take a step back and look at this, it does make some sense. Let's take a peek at the chart here. So we can see that we crossed over the 50 DMA back on Monday, the 26th of June. And we've seen shares top out at this 36 cents level, which is where shares topped out in late May. So it seems as if this level is a firm level of resistance for shares. And then we came down to test this 50 DMA on Friday and held this level. So given all this, it does seem as if the stock is in a better spot technically than it has been over the past couple months. Obviously, it's not looking too great, you know, given the 200-day moving average sits at about $2.20. But with that being said, I do think, you know, on the backs of this news, we could see a move higher off this 50 DMA, you know, at least up to this resistance level at about 36. If not, you know, if we're able to break through this level, I do think we likely move up to 60 cents over the coming weeks to months. So, like I said, I do believe this news event is a bit more firm than CNBC and others are giving it. Are kind of giving it in terms of credence throughout social media coverage. So I do think this 50 DMA holds, and we likely move higher over the coming weeks around speculation about Ryan Cohen obviously stepping in and buying the company. And then, yeah, so that is basically my price prediction, is that we hold this 50 DMA and we come up to 60 cents as long as we're able to break this resistance level over the coming weeks to months, and be on the lookout for any news regarding Ryan Cohen buying this company. Like I said, I do think that fundamental news is a bit more firm than others are, you know, saying. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.